basically, the people watching it closely significantly increase their odds of it getting approved. Probably the non-staking version. Um, and so basically, the ETF holders would not get the staked rewards that basically people that are staking can get. That seems to be a potential line in the sand. I still think it's potentially a little while away before that happens, even though you could get some initial approval starting to come in. I think it's probably in the long run of time, we'll probably see an ETF for it.
Hey guys, welcome back to Everyday Finance. In this video, Lyn Alden discusses Bitcoin and crypto. Structural deficits are progressively shaping the global economic environment, a trend anticipated to continue over the next 5 to 10 years. The current deficits, marked by government expenditures exceeding revenues, contribute substantial capital to the economy, promoting nominal growth and concurrently exacerbating inflationary pressures. The dual impact results in a polarized economic landscape, with specific sectors reaping the rewards of technological advancements, whereas others, especially those dependent on tangible assets such as housing, encounter escalating costs stemming from constrained efficiency improvements. Lyn Alden's assessment underscores the potential consequences of this dynamic for market participants and investors. Ongoing deficits function as a dual-factor phenomenon. They promote economic expansion through enhanced liquidity, while simultaneously intensifying inflationary pressures by elevating asset valuations. Bitcoin has positioned itself as a prominent beneficiary in the current market landscape. The characteristics of being decentralized and deflationary position it as an attractive store of value, catering to investor preferences for inflation protection and reflecting the rising trend observed in other physical assets. The macroeconomic factors propelling Bitcoin's rise simultaneously underscore wider market dynamics. The current inflationary environment, along with ongoing structural deficits, is significantly influencing investment strategies. Investment categories associated with technology and innovation are experiencing robust growth, driven by efficiencies and enhancements in productivity. On the other hand, industries dependent on tangible assets and real estate are experiencing pressure from escalating expenses, thereby exacerbating the disparity between successful and struggling entities in this economic transition. In the future, the ongoing presence of structural deficits is expected to sustain asset inflation, presenting opportunities for investors across both traditional and emerging markets. The role of Bitcoin as a safeguard against monetary debasement underscores its importance in diversified investment strategies, particularly amid rising macroeconomic instability. The increasing institutional adoption of Bitcoin highlights its legitimacy as a financial asset, thereby boosting its attractiveness in the market. And lots of things Lyn Alden discusses, so please watch the video. To end and share this video, and subscribe our channel Everyday Finance. Thanks.
In that space, I think we're seeing some broad rotation of political views. We're seeing potential rotations around SEC views. We'll see how that unfolds in the coming days. But basically, for a while, Bitcoin was and kind of broadly the whole space was becoming somewhat of a partisan topic. But we've seen in the past week or so that there's been significant kind of bipartisan shift, a little bit bipartisan support for it. So it's not clean across party lines, which in the long run I think is healthy. Hard to say because I mean that could get invalidated by the end of the day, but basically the people watching it closely significantly increase their odds of it getting approved. Probably the non-staking version. Um, and so basically the ETF holders would not get the staked rewards that basically people that are staking can get. That seems to be a potential line in the sand. I still think it's potentially a little while away before that happens, even though you could get some initial approval starting to come in. I think it's probably in the long run of time, we'll probably see an ETF for it, just because there's already futures for it. Whether that extends to other assets, I think remains to be seen. But yeah, I would guess probably in some intermediate period of time we'd get one, but it's not something I follow as closely as maybe other people follow. I think a large part of it is recency bias. And so people really tune themselves over what happened over the past 10, 20, 30, 40 years, basically the span of a career, depending on how long they've been in the space. Whereas some of the lessons of history that we can learn about the current period are things that are actually pretty similar to the 1940s, which really only you find in history books and long-term data analysis and that kind of thing, rather than anyone's
Right,
trading career, investment career. And so the
right.
types of things that, in the modern time, it's people that have managed money in emerging markets. They're often somewhat more well versed on these types of issues sometimes because it comes up more frequently. So part of it, I think, is recency bias. I would note that basically over time, from talking to institutions, from seeing some of the financial media change over time, it is becoming more of an understanding of some of the things we're going through, some of the fiscal challenges we're going through, as well as some of the things that digital assets like Bitcoin or stable coins open up to kind of the current macro situation, how they can be helpful, how they can be disruptive, depending on how you look at it. I do think there's over time there's more and more awareness for these things that I've been covering.
The cryptocurrency market underwent a notable sell-off on Tuesday, reversing the gains achieved in the previous session, as increasing US bond yields heightened risk aversion throughout financial markets. Bitcoin experienced a decline of 4%, hitting an intraday low of $97,700, while Ethereum, Ripple, XRP, and Solana recorded losses surpassing 5%. The recent downturn reflects wider market trends, as evidenced by the Nasdaq 100's decline of more than 1% and the S&P 500's decrease of 0.5%. The yield on the 10-year US Treasury increased to 4.7%, with the 30-year and 5-year yields also rising to 4.61% and 4.5% respectively. Increased yields elevate the opportunity cost associated with holding non-yielding assets, such as cryptocurrencies, leading to a shift towards more secure investments, including bonds and money market funds. A recent report from the Labor Department indicates that job vacancies have reached a 6-month high, which underscores ongoing concerns regarding a constrained labor market and sustained inflationary pressures. The forthcoming Federal Reserve minutes and non-farm payrolls data are anticipated to offer additional insights into the central bank's policy direction. An aggressive stance from the Federal Reserve may intensify capital flight from riskier investments. Significant declines were observed in major technology stocks, highlighted by Nvidia's 5.4% drop, which resulted in a loss exceeding $175 billion in market capitalization. Additionally, downturns in Tesla and Supermicrocomputer contributed to a prevailing bearish sentiment in the market. The recent sell-off highlights the responsiveness of cryptocurrency markets to broader economic trends. Increasing yields and concerns about inflation could result in greater market volatility, particularly as investors reevaluate their risk exposure. Institutional investors, recognizing the heightened risk associated with cryptocurrencies, may shift their focus to more secure options such as bonds and money market funds, potentially leading to additional downward pressure on crypto prices. The critical support level for Bitcoin is currently positioned at $95,000, warranting careful observation. A decline beneath this level may initiate a reassessment of lower price points, possibly in the vicinity of $90,000 or $88,000. On the other hand, a sustained position above $97,000 may enhance market confidence, setting the stage for a possible recovery. Despite prevailing short-term bearish sentiment, the long-term outlook for cryptocurrencies, especially as a safeguard against monetary debasement and inflation, continues to hold strong. It is essential for investors to monitor structural elements, including institutional inflows and changes in the regulatory environment, which may counterbalance macroeconomic challenges. The recent market pullback could be viewed as a strategic opportunity for long-term investors to enhance their portfolios by acquiring positions at more favorable valuations. Risk management remains a critical component, emphasizing the importance of diversification and the continuous assessment of macroeconomic indicators that may impact liquidity and market sentiment. Let's get back to Lyn Alden interview.
Probably threatened to resign is the funny answer, but there's actually some truth to it. So, for example, during the pandemic, Powell called for more stimulus. So we kind of crossed the line where normally monetary policymakers don't, as a general rule, they don't really comment on fiscal policy. They try to be not kind of directly partisan. But he said, we've used a lot of our tools. There needs to be some fiscal support, right? So he crossed that line in that instance. What I would say now is that what we're seeing on the other side of it is that there's this kind of overflowing amount of fiscal hitting the market. But he's very reticent to comment on the fiscal side because he kind of goes back to the position of not really seeing that his position. But I think at this point, a central banker, if they're trying to be kind of intellectually honest about this, is time to say it's hard to do any of my mandates when deficits are this structurally big. Because a central bank's tools are primarily designed around accelerating bank lending or decelerating bank lending. That's really what they're mostly geared toward. And we're in a fiscal dominant environment now, meaning that ongoing typical yearly fiscal deficits exceed the amount of new bank loan creation. And so those fiscal deficits are kind of a bigger impact on the economy in many ways than those bank loans, and they can drive things like inflation. They can drive things like nominal GDP running hot with some of the inflationary consequences that come from that. And basically, it's saying, look, I don't really have the tools to deal with what's happening there, and so if you want those mandates to be in any way met, there has to be a fiscal response. And so right now, it's kind of politically acceptable for central bankers or treasury officials to say, look, in the long run of time, yes, there's a fiscal issue, but but then they always caveat by saying, we still have plenty of room. No one's going to admit that the actual road is kind of running into issues under their watch. And I think that there needs to be more transparency around that issue. So I basically would say, look, if you want me to be able to do my job, you need to rein in yours a little bit. Otherwise, I would resign and say, look, you put in a position where I can't meet my mandate because I don't have the tools to meet my mandates.
Robert Kiyosaki, the well-known author of Rich Dad, Poor Dad, has reaffirmed his optimistic outlook on Bitcoin, perceiving the recent price drop as a strategic entry point for investment. Kiyosaki recently tweeted that the dip represents great news, highlighting his approach of acquiring Bitcoin in times of market decline. This strategy is consistent with his enduring principle of acquiring assets at lower prices and holding them for the long term, underscoring his conviction in Bitcoin's future viability as a store of value and a safeguard against conventional financial systems. Kiyosaki's optimism regarding Bitcoin is supported by its predetermined supply limit of 21 million coins, with less than 2 million Bitcoins remaining to be mined. The intrinsic scarcity of Bitcoin enhances its attractiveness as a deflationary asset, especially in a context characterized by increasing inflation and the depreciation of fiat currencies. He has consistently emphasized Bitcoin's function as a protective measure against diminishing purchasing power, an issue that aligns with the interests of numerous long-term investors. Despite the fluctuations in Bitcoin's price, Kiyosaki remains undeterred, highlighting the significance of adopting a long-term outlook. His perspectives are consistent with an expanding group of both institutional and retail investors who regard Bitcoin as a transformative asset class, comparable to digital gold. The prevailing market conditions, marked by economic volatility and ongoing inflationary pressures, strengthen the argument for Bitcoin as a protective asset and a means of safeguarding wealth. Kiyosaki's strategy highlights the importance of dollar cost averaging, DCA, in navigating volatile markets. By strategically acquiring Bitcoin during periods of price decline, investors can mitigate the effects of short-term fluctuations and potentially improve long-term gains. Furthermore, the involvement of institutional investors, enhanced regulatory frameworks, and progress in scalability technologies such as the Lightning Network may serve as significant drivers for potential price growth. Nonetheless, there are still inherent risks present. Regulatory developments, macroeconomic conditions, and market sentiment may present challenges ahead. It is essential for investors to evaluate their risk appetite, implement diversification strategies within their portfolios, and remain updated on the variables affecting the cryptocurrency market. Despite the robust fundamentals of Bitcoin, it is crucial to implement careful risk management strategies to effectively handle its volatility and leverage its potential as a transformative asset. If you learned something from this video, then please like this video and subscribe our channel Everyday Finance, and we will meet in next video. Thanks,